Procter & Gamble reported quarterly financial results on October 18th, 2024 that had dividend stock investors interested in this dividend-paying stock. So in this video, I'm going to evaluate the latest results from Procter & Gamble, what it could mean for dividend stock investors, but also I'll look at the broader implications of this company's results. Procter & Gamble generates close to $100 billion annually in sales, and the company's performance has broader implications about the health of the consumer, geographically, and broader implications. So let's take a look at this interesting company.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So Procter & Gamble reporting organic sales, which excludes the impacts of foreign exchange, acquisitions, and divestitures, which increased by 2% on a prior year base of 7% growth. That sentence has a lot to digest, so let me take it slower and break it down one at a time. When I'm evaluating companies like Procter & Gamble, Coca-Cola, Pepsi-Cola, etc., these large consumer goods companies, I look at organic sales as the more informative sales metric because, like the company says, you've got foreign exchange that could impact sales growth, right? If foreign exchange, meaning currency fluctuations, change in one direction or another, it could have, 1 or 2 percentage point impact on the company's sales figures. And since this company doesn't generate very large sales growth numbers to begin with, those could have big implications. So it's more informative to remove those to determine what the company's actual demand was, what the company's actual sales growth was organically. Also, acquisitions and divestitures. Procter & Gamble has several brands that the company sells and several geographies where it operates. And if the company chooses to sell one of those brands or add another brand to their portfolio of products, which they often do, it could change the way you look at the company because sales could be down 7% as a result of a divestiture. But organically speaking, the company still generated growth. So that's why organic sales is more informative because it excludes those changes, those pluses and minuses, which happen frequently for a company like Procter & Gamble, and gets an inside look at the company's core demand for its products. Moving on, the company said that core earnings per share were $1.93, which increased 5% year over year. So organic sales growth increased 2%, organic earnings growth increased 5%. That's solid, especially considering that we're comparing with the quarter last year, where the company's sales increased by 7%. So it was comparing with the robust quarter last year. Remember, last year, consumer balance sheets were more robust. People were getting raises more often. Job growth was more robust. And so consumers were healthier last year, and they were purchasing more premium products, which Procter & Gamble's portfolio of products is a more premium-based product across their portfolio, all of their categories. They're a more premium-priced brand. And so when consumers are doing better, Procter & Gamble does better. And then when consumers are doing worse, Procter & Gamble does a little bit worse. Now, this isn't a very volatile company to begin with. It's a more defensive company. They sell like household staples, things that people need regardless of what their job prospects are. But people still have choice, right? You don't have to get the more expensive laundry detergent. You can get the lower priced laundry detergent if you're really in a bind. But for the most part, people buy these products whether or not their job growth prospects are good or bad. The company's operating cash flow was $4.3 billion compared to revenue of $21.7 billion. They have a pretty good cash flow from operations to sales ratio. Now, one of the more informative things I like to look at from companies like Procter & Gamble are the differences between price increases and volume growth, right? Did they increase price in the latest quarter? And how did consumers respond to those price increases? I've been following this even more closely in the last few years, given how inflation got out of control in the last 5 years. And so I'm curious to see how consumer behavior is responding to price increases. And there's been a shift lately in consumer goods companies, and Procter & Gamble, similar trend here. They increased their prices by 1% in the recent quarter, which is the lowest percentage increase in price going back several years now for Procter & Gamble. Ever since the onset of the pandemic, Procter & Gamble has noted to investors that their commodity costs have increased and they've passed them along to consumers. But a 1% price increase is the lowest going back several years now that I've been following Procter & Gamble since the onset of the pandemic. A 1% price increase is the lowest increase. Now, interestingly, organic volume actually increased by 1% as well. So even though Procter & Gamble increased prices by 1%, people didn't buy fewer items. They bought more items from Procter & Gamble, 1% more items. And so combined, that created that 2% organic sales growth. 1% came from price increase, 1% came from volume increase. So consumers are finally getting some relief from price increases. Companies like Procter & Gamble, Pepsi Company, Coca-Cola, and others have said that consumers are not reacting well to these latest rounds of price increases, and so they're pulling back on the increases, and in some cases, they're offering more promotions and incentives to lower prices on consumers because people's balance sheets are not as strong anymore. Coming out of the pandemic, they were very strong because of all of the extra stimulus that went into the economy, and then people were spending more time at home, so they weren't spending as much money on transportation, on travel, on eating out. And so people had pretty good bank account balances and they were feeling flush with cash. And so they were willing to pay these higher prices for most of 2023. However, starting this second half of 2024, I've noticed from many consumer goods companies that people are spending less. People are not willing to tolerate these price increases as much anymore. And it shows further evidence that inflation is likely to continue trending downward because companies like Procter & Gamble will notice these responses from consumers and they will know that consumers are not willing to tolerate those higher prices. And so they will not increase prices because they don't want to experience the decreasing volume, which will have a negative impact on overall earnings per share. Also, we got further evidence that the economy in China is not performing well. The company iterated two products. The beauty segment experienced volume declines primarily in Greater China, and the healthcare segment also experienced volume declines in Greater China. So the company demonstrated growth in most of the regions it operates in, except in Greater China, which experienced decreases. And if you've been following my videos, you'll know that nearly all of the companies I'm reporting on are demonstrating or saying a similar thing, that sales in China are not going well or they're going backwards. And so another point of evidence here from Procter & Gamble. And it'll be interesting to see how steep the economic stimulus will be in China. The government over there is discussing stimulus to jolt the economy, to get it to grow again. And it'll be interesting to see the magnitude of that stimulus and to see the response, how consumers react to that stimulus. Procter & Gamble saying that they experienced the benefit of 170 basis points from productivity savings and 30 basis points from increased pricing. But that was offset by 90 basis points of unfavorable commodity costs. In other words, rising commodity prices hurt the company's gross profit margins by 0.9%, and then 60 basis points of unfavorable mix and 40 basis points of product reinvestment. Unfavorable mix is package size. So certain package sizes are more profitable for Procter & Gamble than others. Typically, the smaller package size is more profitable for Procter & Gamble, and then the larger package sizes are less profitable for Procter & Gamble, but they're okay with that because people buy more when they buy those bulk sizes, and then the smaller sizes are more profitable per unit, but they also buy less, and so there's an offsetting factor there. So Procter & Gamble Following these results, it's now trading at a forward price to earnings of 22.87, and the analysts on Wall Street that are following Procter & Gamble stock expect the company to grow its earnings per share by only 6.5% each year over the next 5 years, which is typical for this company. That's roughly what it grew over the past 5 years. It operates in a mature industry with limited growth. So all that being said, is Procter & Gamble stock a buy? I have it rated as a borderline buy, between a hold and a buy in between. The company performs excellently, great execution. It knows how to run its business. And on the flip side, it operates in a very slow growing industry. And so you've got those two offsetting factors. And that leads me to recommend this as a borderline investment longer term. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock. And this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.